Hey, what's up, guys? It's Tyler here, just giving you a mid-market update. It is about 1:33 Central Time, 2:33 Eastern Time. So, market has ran its course for the day. It's coming to a close, probably within the next hour and a half or so. So as you can see, if we go to the good old charts here, which I'll get ready to go to, um, you can see that right as soon as the open started, about 9 o'clock, it made a run up above the liquidity point. So I'll give you a liquidity point here right now. What I have on my chart is a indicator on Tradingview. It was made by somebody else, but however, I kind of modified it to where it was a little bit easier to read, and yeah, that's pretty much it. It was little bit easier to read, easier to see the boxes, things like that. So you can see the order blocks for those that know smart money concepts. If you don't know smart money concepts, I would suggest looking into a guy named Inner Circle Trader, also known as Michael Huddleston. He has a lot to inform you about on smart money concepts. Check out his YouTube channel. That is basically who I learned from. However, I have put my own twist on things, but I still learn from him every day. So, right here would be the liquidity point that was happening just prior to the opening. So that was Monday around 6 o'clock in the morning. So as London started, so this is Sunday going into Monday. As London session started, you could see it ran up and then ran down. It ran about equal lows as far as the Asian session is concerned. So the Asian session runs from about 6 p.m. until about 11 p.m. After that, you have about a lull until about 1 a.m. That'd be Eastern time. So this chart is in Eastern time. 1 a.m. is when the German market opens, basically. The European market opens. An hour later is when you have the London market opening. So that's when you'll have most volatility. So you have the European market open all the way up until about London. London kind of stalls and then starts dropping until you get about another lull in between the two markets. So in between the two markets, you do have kind of another low, and then it starts running up until just prior to about New York Open. We do have a bit of consolidation, and then as soon as the market opens here in New York, or in the New York Open, it runs down, but then it runs up really quick, takes out buy side liquidity, right? So anybody that would have been going short around that blue line area, about 17,313, uh, they would have had to have a pretty large stop loss to stay in the game if they were going to go short. A lot of people usually don't have these kind of large stop losses, so they get taken out. Or if anybody had a buy stop thinking that it was going to run it, then they would have got taken out as well because it turned around and went against them. That's kind of the premise of smart money. Smart money usually does this. It takes the institutional traders know where retail has their buy stops and their buy limits placed. So they will run against them both ways. So they'll buy into it and then they'll sell against it, taking both sides of retail out. So then it drops. And where does it drop to? It drops to basically a bullish order block. Let me get rid of this green line because I think these came from a lot prior to. I think if you had a 4-hour chart, that there would have been about somewhere around a bullish order block within those two green lines. So basically, it went through that bullish order block and it hit a smaller bullish order block on the 5-minute chart. And then decided that was around the time it decided to bounce up. So generally, what happens is that the first 30 minutes are about kind of wonky, right? This is why the ICT has what's called kill zones. So if you turn on the kill zones, which is another indicator you can also grab, you can see where the price is most volatile and is where is also most likely to turn. So as soon as the market opens, you can see it runs up and then runs down. Generally, the whole 10 o'clock hour, it will go the same way. Um, Almost the entire 10 o'clock hour. If you go back and repeat, you can watch it almost every day. Same here. If you look at Friday, look at this, the 10 o'clock hour. You can see as it's going down almost the whole time. 11 o'clock hour can be tricky. It can turn. However, it depends on how the market is moving. It can go the same way as well. But today, it decided to turn as it hit a bullish order block, which is something you can always look for is to see if the market would turn or not. And that's what it did hit, and then decided to move up. Now, as we moved up, it did go back toward this liquidity point again. So it searched for topside liquidity both times. So topside liquidity came down, hit a bullish order block. So you can tell we're in bullish mode right now. As for the day, anyway. As for the week, that is going to be an interesting question because what you'd have to do is understand how the weekly makes their own candles. That would be another good video for you to watch. If you go to ICTs, search for weekly. There should be a video that would pop up that would show basically a weekly bias, how Monday, Tuesday kind of can form a wick sometimes. Generally, Monday could form a wick, and then the rest of the week can turn a different way. So you not only do you have to think about this on a daily basis, you have to think about this on a weekly basis. And with, I think it's PCI coming out tomorrow. Let me go back to Forex Factory and find out. So we got today, not much coming out today. And then tomorrow, USD, PMI. We have PMI, not PCI. PMI flash services and also flash manufacturing PMI coming out tomorrow. Those could be drivers that could take the market, depending on how we end up today, which it looks like it's doing a good pullback. And it looks like it's pulling back. These boxes I have in here usually represent some kind of breaker, which is another type of order block, or it's more like a down up down motion, and it's usually the last high or last low in one of those formations, which I have a whole video on that. I can put the link to it in this video. I'll put it, and then I'll take those out for now. But as you can see, as it was running up, we ended up with a lot of fair value gaps and order blocks in between here and there. And that's just the 5-minute though. If we look at the 15-minute, we probably ended up with just fair value gaps. Yes, we did. So these green boxes are fair value gaps. Now, what fair value gaps generally tend to do is they generally tend to make price gravitate back toward them. So I would not be surprised if by the end of the day we ended up down back here at around 1732, because we would go through one fair value gap, another fair value gap. If we go to the 1 hour, we'll see how long that takes to load. You do have a very, very, not a very large fair value gap, but a pretty large fair value gap within the 1 hour, right around the 1 o'clock time, which would be basically what we call the afternoon silver bullet time. And there are 2 silver bullets, one in the morning session, one in the evening session. Morning session happens between 9 and 10 a.m. Evening session or afternoon session happens between 1 and 2 p.m. So it looks like the silver bullet happened here, created a fair value gap. Looks like it entered a 1 hour fair value gap here, filled the whole thing. I would not be surprised. It looks like it even touched a line that I had created. Again, I'm not for sure what that line is. Probably that's a bearish order block is what that is. So that's a bearish order block from a formation. If I could get it to zoom over this way, I could probably show you. But it's basically a low. So as the price ran up, there was a spike down that created a low around this price point around the 17,500 mark. And so it comes up, it touches that. And now we're kind of sitting at discount area. I wouldn't be surprised if by 3 p.m. New York time, we have a full fair value gap candle and then possibly moving back down. However, it could also continue moving up until we hit this bearish order block right here, this big red OB. All right, so that would be a rejection area to where you would notice price getting rejected. I would not be surprised if it hits that. Would be around 17,475. If you notice getting it rejected, then it may take a slight pullback and then probably another consolidation right around this fair value gap area right here. That's what I'm thinking. Or maybe back down in this fair value gap area. But that's just a midday update for you guys on smart money concepts with the NASDAQ futures. Let me know what you think, and we will see you guys on the next video. Thanks for watching, and have a good trading day.